when should a founder approach a VC versus a family office?
You should be very clear about the kind of VC. When I say the kind of VC, the specific people that you're going to be working with. If I was to answer your question, what can go off, right? One is just that your individual styles don't match.
Know who you're marrying.
Which is why the title of the report is also Warm Currents and Cold Seas.
It may not be a very glamorous industry, which also I think is changing because now a few VCs are going and backing some of these players.
Now the most cheerful question of all, Gen AI. When is it all over? Like how many more months?
Over a long 4-5 year period or a 10-year period, I see little reason to believe that.
Hello everybody, my name is Dinesh. I work for Rain Matter. As part of all of our daily tasks, I think we are all very curious about venture capital. Bain team releases a very nice venture capital report every year. So for the past 3 years, me and my co-host Bhuvan, who you'll meet shortly, have been discussing doing a podcast with the Bain team whenever they put out this report. So third time's the charm. I think it's been quite some time, but we figured out some time to meet with the Bain team and do a nice conversation. Spoiler, we haven't spoken anything explicitly about what's in the report, but everything that's around it and the nuances that goes into making the report and why it's so important to understand it. So hopefully, it's of use to all the founders out there, all the operators, all the venture capital folks and all the other investors. And if you're trying to learn a little bit more about some of the sectors, what LPs are thinking about India, and what most other investors should know about family offices and allocation to various sectors, please do watch this conversation. Thank you so much. Hi everybody, my name is Dinesh and I'm here with Aditya's and also my co-host Bhuvan. I'll let him introduce himself also. But we are here to talk about a report that Bain put out on the VC ecosystem 2026. But Bhuvan, do you want to introduce yourself?
Yeah, my name is Bhuvan. I work for Dinesh.
No, he does not.
So, I generally don't do this thing. The reason why I wanted to do this is because I think the Bain VC report, it's one of the best resources to get a sense of what's happening in the Indian ecosystem. And this is not me just saying that because you guys are here. It's been a report that's been informative to me since the very first year. I still remember there was one particular tweet Nitin did, and we were looking for private markets data. So I went through all the reports, manually typed all the data points from your report, and we did a nice infographic. This was in 21 or thereabouts.
Pre-Claude era.
Yeah. Pre-humanity. So I've been a big fan both the Indian report and the US report because we are also a broking company with a VC arm attached. We figured why not do it with the best. That's the context. The way we'll do it is Dinesh and I will both ask a lot of these basic questions because I don't think people get these definitions. Yep. And people also don't get the context in which VC is a thing in India. Of course, at least in the metro folks, the metro areas and people who are generally a little clued in, VC might seem like a big thing. But if you step outside the bubble, I don't think many people even know that VC is a thing in India. So I'll ask a lot of questions that will evoke a eye roll. So bear with us and then we'll get to the report.
Do you guys want to share 20 seconds each about what you guys do at Bain and why you guys are so interested in the report as well?
Sure. And why are you both named Aditya?
Yeah.
I think when you were named Aditya, it was a more unique name, but over the years, it's now become a
thing. Yeah.
So Aditya Shukla, a partner at Bain. I lead a financial investors private equity practice. Been at Bain for 20 years now. And along with my fellow Aditya, who will introduce himself shortly, have been authoring this VC report for the last 5 or 6 years now. We also do a private equity version of the report, which actually is a longer, earlier history
for India.
For India, we do it for globally as well. So there's a global report, there's a APAC
I'm a huge
report,
fan of it.
And then there's the India report. The India PE report we probably started around 2012 or 13. The VC report we started just about during the pandemic, which is when the market really took off. So very, very happy to talk to both of you.
Aditya Muralidhar. I am an associate partner in, again, the financial investors and private equity practice. Do a lot of my work actually at the intersection of private equity, AI, tech, software. So there was a natural extension of my interest into everything VC, everything growth equity. We've been writing the report together for probably 3-4 editions now.
Out of curiosity, what's the backstory behind doing the report?
Yeah, so I think to what Aditya mentioned, around the time of the pandemic, when we started seeing this absolute inflection in growth equity investing and VC investing, I think there's a lot of interest in the market to call out what the insights were for this class of investments apart from the broader private equity report we put out there. The second thing, is I think there are certain sectors such as consumer tech, software, fintech, which naturally saw more minority deal activity, more growth-oriented investments, which I think needed a bit of a different treatment, also because of the states that the companies are in, also how the investors themselves are looking at it, which essentially gave us the reason for creating a very separate culled out report.
I think we meant it initially both for founders as well as the fund ecosystem.
Right.
And we thought, can there be one? So you can't have perfect data, but to the extent that you can,
I'll get to that.
yeah, I can see you have a list. But to the extent that you can you really create like one consolidated source of everything that is happening, both quantitatively, but also, as Aditya mentioned, qualitatively, right? And then can it also be helpful for founders? So one of the early additions we had done, we focused a lot on SaaS companies, right? Or software companies around that time, 2021, 22. Then a lot of health tech companies, fintech that we spoke about, right? So the idea was do a broader picture, but then depending on that year or the last 2 years, if there are specific subsectors that have either seen more interest from funders or just seen more traction in terms of activity of companies being formed in that space.
In general, it's becoming very granular by the year.
Yes.
You would have seen that.
Yeah. Now the bar charts have a lot more.
we are working harder also for it. So yeah.
Which we were discussing this. Like, even as somebody who tracks the public markets closely, good quality data is a perennial problem in the wrong body part. I'm assuming that's even worse in this thing, private markets. And especially in a country like India where private markets is not really a thing, even today. Where do you guys get the data? How do you go about it? How painful is it, physically and mentally?
Yeah, it's genuinely like piecing together a jigsaw puzzle. We start with the broad aggregators. Okay. If I can drop names, it'll be Traction, Capital IQ,
Listed
S&P.
company, not a stock tip. But
Yeah. AVCJ, which gives a slightly broader picture to understand the deal activity, exits, fundraising to some extent. But we augment that quite heavily with just very granular secondary research, going sector by sector, subsector by subsector, to make sure we're not missing any key deals. Then we speak with investors, we speak with lawyers to make sure, again, you broadly covered it. And that's further validated again to make sure that we're looking at the right number. Some of them can be a mix of equity and debt. So we have a team that obviously supports us, a team of at least 3-4 people that spend about a couple of months just cleaning the data up. I think the database that we have accumulated over the last, I would say, decade or so is probably the best source of truth out there when it comes to Indian investing activity.
by the way, will that team remain after Claude?
I'm happy to say that I do believe they will exist.
What percentage of the report is in terms of the effort that went in last year versus this year? How much of the report this year was it easier with all the AI tools that you have?
I think it's not because then when you start going very deep in specific subsegments, whatever productivity benefit you are getting, I think it was as difficult, right? I think some things have become easier, and I think that's a broader question on management consulting and everything else also, right? But I think you kind of bake in that productivity when you're planning. See, some of this stuff, for example, what Aditya mentioned, because we work with most of the funds in India and outside, you have that access where you can actually go and talk and check, numbers, data, does this make sense, doesn't make sense. A lot of that will still remain. If there are new sectors, for example, we spoke about verticalized quick commerce, you're talking about well tech platforms. Now, some of them are so nascent that it is anybody's guess, right? So where they go. So you were still spending a lot of time trying to piece things together. Where I think things have gotten faster is, of course, just the number crunching and, putting the stuff in one consolidated base. That's gotten a little faster.
I think what Bhuvan was asking also with data, you guys must be speaking to a lot more, say LPs out there, family offices, institutional folks also. I'm guessing all of that was manual last year. For example, the transcripts of some of these calls, somebody had to go through it manually. But is there at least first question there is, what are they thinking about India? Obviously, everybody will want to know about that specific question, saying what are people outside India thinking about India? And what is their insight about what's happening in the country with VC, with PE? Because all of these companies that have raised money from 2021, for example, some of the VCs are obviously sitting on inflated valuations. At least that is very clear. So what are they thinking today? And the second bit is, with all the insights that you have, Was this something that came out that you probably felt last year would have been difficult to probably come up with all the AI tools at your disposal?
Maybe I'll take the LP question and,
Yeah.
so
Absolutely.
see, a lot of these LPs are funds we work with directly, and many of those are LPs into other funds, right? Both Indian funds as well as regional global funds investing in India. I think in general, most LPs that we speak to are excited about India, about the India opportunity. They actually don't see it as an India versus US or an India versus global market kind of a trade-off. I'll tell you who does, right? And there are a few pockets of funds that might look at it that way. And I think they are excited, one, because there are some sectors that are very specifically unique to India. So when we speak, even we spoke of e-commerce, right? And then we speak of quick commerce now. We speak of EMS or electronics manufacturing. We speak of a lot of innovations in health tech, everything that is happening on the broking side, which you guys know better than us, and on wealth tech. Some of them are also very uniquely India, either because the problem is uniquely India, or we are at a point in time where these solutions are likely to find some product market fit, as in they're not like way ahead of their time, or they're maturing, right? So in that context, I think they want to play these themes. The second thing that's happened is that they have seen some exits in the last 3-4 years. So if you look maybe a decade back or even just 2017-18,
No IPOs.
there were no IPOs, there were no exits, right? Even strategic sales, right? Few and far in between. And I think the LPs that we talk to say that, look, we are getting more confidence that these exits show that there is a robust, thriving ecosystem, secondary market here. And that gives us the confidence to actually go and deploy more. Because if you see fundraising in India, for India, right? I think around almost $5.5 billion of VC fundraising for India last year. And of course, there will be portion of the global capital allocated that will not be marked fully for India, but which will get deployed in India.
So I had a follow-up question. So, I mean, when I started initially tracking the VC space, I was always wondering where's the money coming from because India is poor. So today, all the money that comes into VC across, all the deals that happen in India, how much of it is domestic pools of capital versus how much of it is global
Funds or
allocation?
LPs?
LPs.
LPs, I think, see, global LPs are still
Very dominant, yeah.
very dominant, right? So many of the sovereigns from whether it's this parts of Southeast Asia, whether it's, so think of GIC, Temasek, CPP and many others, right? They continue to be pretty active. But now you're seeing a lot of Indian LPs also, right? So you are seeing UHNIs, you are seeing family offices, you are seeing offices of conglomerates that are putting them behind. So I think that mix is still skewed towards a lot of it being global.
I mean, if I can push you and ask you to put a number on it, how much of it is global and how much of it is domestic? Some directionally.
I think more than half of it will be global.
Actually, that number used to be much, much higher, right?
Yeah, much higher.
6 years that you guys have done the report, like, has it changed materially?
I think there's a lot more domestic participation that we're seeing.
And the thing that you might call out as hate, starting on a low base effect, etc. But I think to the point Aditya made, the momentum from family offices, the institutional investors too, that's been significant over the last, I would say, 4 or 5 years, which also gives an increasing amount of robustness to the market that there's domestic capital looking to be deployed back in India.
So when you say family offices, these are all, let's say, second generation money, people who had exits.
Yeah, people are doing it. They're trying to create a new engine of growth. I think a lot of these people also trying to diversify away from, they're seeing this as a different asset class altogether. In fact, they will see VC as a very separate asset class from private equity. A lot of these guys would have probably invested in the biggest family offices or the biggest LPs in VC funds would have first gone into PE funds, right, as LPs. And probably some of them are still there. So they see this as a different asset class. And we'll talk about how it's performed and all as we talk about it. But that's why I think they get excited about. And then many of them will also do direct investments, right? As they've, like, if it's a big family office, right, and they have, they can get allocation on the cap table, then they will also come directly along with the fund.
Why are they really investing in venture capital? Because, I think CRISIL does a very nice report on, just the returns and benchmarking, etc. The data isn't like really clear about, is there any benefit of diversifying away? Public markets seem better because liquidity is there, and I think you have even more visibility. So why are these family offices really investing? One is diversifying away from the core business, but some of these sectors they're getting into, they probably don't have any expertise. Like if a manufacturing company is investing into deep tech in a space that they understand, I think there's some nuance there. But they're investing into quick commerce, for example, through a fund, and they're getting essentially some co-investing rights, whatever. How are they even making peace with this?
I don't think you need to know the sector, right? A lot of times, even public markets, people are going and investing or taking large positions, right, in companies where they would not, they would not know, right? I'll say this tech or there is
it much more undiplomatic.
Yeah. I'm learning. So they can. You don't have to. We'll come to actually why I think for some kind of companies or some founders, family offices of the right sector and the right kind can actually be a big leverage. If I'm a consumer company today, if I'm a D2C brand or a offline consumer brand, or I'm a quick commerce first brand, and I have a large consumer conglomerate backing me as a strategic investor, the amount of access and information that they can give me about distribution and many things is very...
So that's a kind of information asymmetry about the market.
Right. So in general, I don't think that you need to know if you're doing a private investment. Returns, right? See, public market returns in India, I think are an aberration in the sense that they've been very high. I think it's only in the last 1.5 years,
There's been moderation.
there's been some moderation, right? And everyone thought that whenever there's a dip, you need to buy more, and
Oh, that's still a thing.
that's still a thing even now, I think, last couple of weeks. But I think some individual VCs have actually done well. I think the issue has been more on distribution and not on MOICs, on
So I mean distribution of returns.
distribution of returns, right? And some VCs have done better than the others. One challenge that I think that's happened is that in the 2020 to 22 vintage, valuations were very high. Right, and there was
Understatement.
Understatement, right? See, I'm going to learn, so I'm going to become better at being less diplomatic. And a lot of investments actually happened in that vintage, right? So of course, you see when we say DPI, we look at the exit value, but you have to look at the entry timing and the entry value, right? And I think some of it has been that. So yes, people need to be more disciplined about the investing approach. But I think comparing VC as an asset class to Indian public markets over a 4 or 5 year data is probably wrong. Even gold has done very well, right? So by that logic, we should all probably should invest or should have invested in gold.
By the one, just tying two of the threads together, the one trend that we have seen is earlier family offices largely look to go solo and make the direct investments. I think their evolution into LPs makes a ton of sense because getting access to the best quality assets out there, I don't think family offices necessarily felt their ability to get their foot in the door as strongly. I think right now what it also enables them is it's a broader top of the funnel, lesser work actually when it comes to doing diligences, etc. Because as long as you have the right partner, they'll do that work and they'll hold that bar for you. I think that mode actually makes sense. I would say it's a more efficient way of diversifying into a more fragmented asset class, if that makes sense.
Mutual fund for an family office.
Basically, yeah.
They're really building big teams now. Many of these family offices, right, are trying to build teams that are only focused on investments.
Did you find that happening even now? Like, as in, is it happening in 2026 as well, as we speak? Just the volumes of amount of money coming in with all the things that has moderated over the past couple of years also, in terms of at least say people talking about how some of these investments have done over the past 5 years. Is the volume and is the interest still high in family offices?
It's a gradual increase. I think last year, if you combine micro VCs, family offices, corporate, venture capital arms, those three broadly I would put in a similar bucket. I think it's gone up maybe about 15% in value over the last year. I think what we are seeing, which is probably a little bit of a forward indicator, is the infrastructure they're building up internally. And we're seeing how their thinking has evolved, because I don't think the X amount of capital deployed today and the X amount of capital deployed 3 years ago has the same flavor to it if you really dissect it in terms of the partnerships they're taking to the market, the way they're thinking about deploying. And also, I think there's a certain cautiousness that's come about on which sectors do we really double down on. So I don't think just the top line numbers does justice to the dynamics underneath it.
But I think it will, I'm telling you, many founders that we speak to who have found the right family office, usually these family offices, they should be more patient because they should be more patient. And some of them may not be because some of them may not be used to this asset class.
We were speaking, I was telling, how, because until now, public markets were the only game. When I say until now, let's say.
Which is a very liquid market, right? You can...
So I get to see my pricing every day. I get to see my marks every second. And I get to see the 12% guaranteed number. It's there in the Indian constitution. I get to see that. I get to see that every year on year.
Joking.
How is that condition, let's say, the LPs, the newer investors? And the second, the follow-up question to that is, after 2020, there were a lot of tourists into the public markets. And the tourists are now leaving. They figured out, okay, it's not there in the constitution. I can actually see a negative year. It was surprising for a lot of people. Was it a VC phenomenon also? Two parts. How have the public market returns conditioned the behavior of some of those, let's say, funds, investors, newer investors?
Great question. I think there were some family offices that were actually very savvy. And these might be people who were individually LPs in, other funds, either outside India or in India. So they understand. See, the biggest thing you need to understand in this asset class is that it is more unpredictable. and it will have a longer gestation period. And especially now, I feel if you are going and investing, say in deep tech or in climate, right, or even in something that has a very long gestation period, your holding period and your expectation also needs to be much longer, right? There were people who had this understanding from their prior either investments or their work experience, and they were fine. But definitely, I think there were some who have to get used to this model, right? That you can't see you won't see the price move up and down every day. You cannot ask for an exit, every year or every second year. And look, which is why if it works, your returns are going to be disproportionately higher, right? So you have to kind of live a little bit with that uncertainty. But I think what we are seeing is that a lot of the corporate arms and the family offices are building teams, and they're investing behind getting people who have some experience of investing or managing portfolio companies to get better governance, right? And to get better discipline about underwriting deals and how do you do diligence.
Yeah, I think you spoke about there being too many lines now. I think in terms of sectors, I think VC in India was essentially like a commerce play, SaaS play, and IT maybe to a certain extent. But with all of the things happening with different sectors, all of the family offices, for example, are they chasing trends which are reaching their peaks? Like, do they get to know when everybody else is exiting and they're probably, somebody's selling them something that they're probably not understanding?
Oh, I think many of them very savvy.
Yeah?
Yeah,
In fact,
I
I
agree.
think, right, many
I agree, actually.
very...
And all these people that you're saying they're hiring, are they all specialists in particular sectors? Or are they all like generalists?
No, mostly generalists.
Mostly
right?
generalists.
Mostly generalists. I think
Maybe just talk a little bit of how, let's say, from 2021 to from the first year of you guys doing the report to today, to Dinesh's question, how has have they matured? How has their behavior changed? How has the composition of the asset class itself has changed in terms of people who are investing? Like, this is like a very subjective opinion, I get it, but
yeah, I think it matured as a VC as an ecosystem, right? Because see, I think if you go back even 10 years, right? I think there was a period 2013 to 15, 16, right? When there were a bunch of these consumer tech kind of companies.
that was the only game in town.
Right, it was the only game in town, right? Some of them still survive. I think around, some of the cab companies, for example, started then, a few others. And then there was a moderation that happened, right? And then again, you saw just pre-pandemic doubling down on the consumer tech winners, whether they were the horizontal players or in each vertical segment, you were looking at who has actually scaled, who has done better. Those guys got funded. Those guys come out, they went and IPO'd, etc. later. Then if you see the pandemic period, around that time, I think that is when you saw a lot of India SaaS for the world, right? And that was a huge driver for a lot of the VC investments. The simple reason that we say, look, we have great talent. This talent has actually worked in some of the top tech companies in the US. You had examples of Freshworks, of a Zoho, of a few others actually scaling. And many of these companies actually went and sold to Fortune 500 customers in the US. In fact, most of it wasn't SMB SaaS at that point in time. It was enterprise SaaS.
Building in India for global was not really a thing.
Yeah. And so you saw a big kind of, boom that happened there. And I think then again, 22, 23, around post that time, right, you started seeing more of I would say, a slowdown in funding. It was more of a consolidation phase. And now again, you're seeing some gradual uptick. Long story short, my sense is that the ecosystem is maturing a little bit in terms of the expectations that funds have, LPs have, of the kind of return profile, and also of the process that they need to follow to go and invest. I think the diligence questions, right, what they look for in the same sector, right? A lot more of them look for it now. I think there was definitely, look, the cynical point of view will be that they won't, right?
But the timelines have also increased, right? I mean, they are also being very patient
It's
with
more
diligence.
deliberate
It's being more deliberate.
in a couple of areas, right? Like, one is if you look at a Series B investment today versus maybe 3 years ago, there's definitely a ask for more of the metrics. These, let's say, consumer tech, since we alluded to it, cohorts, burn multiples. Like, I think runway as a concept, obviously, people are really hammering down on to understand, like, where do we really cut this and it starts rolling by itself. The second area where I would say timelines have increased, but I think that's a very good sign, is the ask on what governance needs to look like has quite dramatically shifted. I think the ecosystem has learned on what are the basics that need to be in place. I mean, we're hearing what we used to hear for Series B raises about 3-4 years ago. Yeah. Audited financial statements, let's begin with that, right? I think there's a lot more focus on that. And I think the question that you had on family offices, I think that's where the thread was also continuing. And early we spoke about them partnering with the other investors. I think a lot of that maturity is funneling very fast. So earlier, to the point Aditya made, there were big family offices, people that really were in the know. They continue to hold a rigorous process. But really some of these younger family offices through their partnerships in the market, I think are very fast beginning to understand what do I really need to look out for. And I think that's been also a very good shift in the market.
Since you said what shifted for these family offices, a lot of the founders are watching this probably will want to know what approach works for family offices versus a VC. Because when you go to a VC, I think you're actually talking about just numbers, right? You're saying I'm 100% year-on-year growth. There's my unit economics, and essentially saying consumption's increasing. There's my target segment XYZ. But the family offices, like you said, are more savvy, much more nuanced. I'm guessing a lot of them are more long-term, so they want to see some of these companies build for the long run. Also, is the approach different in terms of evaluation? Like because all of the entrepreneurs need to know what should they really prepare for, because the approach is different.
So it is, right? I think, especially if you're talking to a family office where the parent conglomerate or that company says a consumer company, right? And you have a consumer startup and you're going and talking to them. I think the discussion happens at a very different level. When I say different level, I think it becomes a lot more first principles, fundamental. What are you solving, right? How will you really build distribution?
User behavior.
Right, user behavior. So it's a little less about, because see, a lot of these guys are also, as an investor, they'll also be more cautious, as they probably would be in their own businesses. Yeah. So they want to make sure that this is not just hype. And I think the kind of questions that they will ask to gauge the merit of the founders, their expertise, but more fundamentally, why are you doing this? Like, I know founders who go and spend a lot of time with these family offices, and the questions they get asked is, why are you doing this? And they spend a lot of time talking about it. They don't talk about, oh, I'm in 5 years, I'm going to be at this number or, that milestone. So a lot more 101. And then it gets into a lot of specifics. Now, of course, if there's a family office which is not part of that sector, right, and you are coming from a very different sector, then it can become a little different, but still they're going to ask you more fundamental 101 questions.
But out of curiosity, for this newer age non-VC VCs, your family offices, your UHNIs, or some of these companies, how much of this is them? Like, for example, Indian companies are notorious for not spending. Like, we all know the numbers. The capex numbers have, they've not really gone anywhere. One might cynically argue also they're really bad at investing their incremental cash flows. Are they investing in these newer age companies because they don't have the imagination to build the newer age models themselves, and this becomes like an opportunity set for them to acquire in the future? Or is it just because they have too much money and they have nothing to do with it?
Good question. I think you framed it in an interesting way.
I think the view of these companies as a way to get to the next level of capabilities, right, and the fact that it's a capability-driven acquisition is, I would describe that as a majority. It's less to do with, we have quiet capital sitting and I don't know what to do with it. It's a pretty smart move. You see this trend mirroring actually a lot of what we see in Europe, in the US. One could have seen it coming as well. But you are right. There are two forces to this. These are investors that are a lot more value conscious, especially these, if you look at large cap trying to go for these strategics, and they're under the radar. They'll have to be thoughtful about it. But I think what ends up happening is, in a market where there's a lot of focus on valuation, the synergies that these companies can offer to the companies, I'm talking about companies very specifically, are non-trivial as well. So I think that balances out, which is why these companies also end up becoming fairly competitive in some of these deals that just standalone investors, unless they have a broader platform, can't really compete at the same valuation.
To follow on to his question, say somebody is raising capital today, because you must have spoken to founders and venture capitalists for this report. Would you have a mental framework of when should a founder approach a VC versus a family office? Because the technical mindset today or the entrepreneur is also confusing, saying the money is of the same color, but what comes along with it?
Setting aside the fact that I'm desperate for money.
So, no, I think you're probably saying I'm at square one or square zero, somewhere around that time, right?
I have no idea. Who should I go to?
Maybe you may have a different view, so we can all debate and discuss this. I think firstly you need to be very clear, do you want external money or not? I think not all models need external money, and it's totally okay. In fact, if you see so many of the public market listings who've gone on from small to become mid caps and even larger are companies that were generating cash flows that really didn't need external capital, right? And many bootstrapped examples that you can think of. So I think that is the first question that you need to ask yourself. And there is there are lots of factors that will drive that decision. One is, of course, personally, the pace of growth that you want. Also, some sectors will need more cash, and either you fund it or somebody else has to come and fund it. So that should be very clear. The second thing then is, okay, now I need cash. Who do I go to? Look, my sense is if you're doing anything that requires a long gestation period and high amounts of capital for iteration, and you don't know if the product market fit exists or not, you should try to go for institutional capital, because they will probably write larger checks, if not now, then in the future. And they could also then help you if they come on board, raise subsequent rounds, connect you to other investors, connect you to their companies, portfolio companies, build that ecosystem. So for example, if I'm building something, if I'm building a Palantir type equivalent in India today, I should go to some of the VCs, because they will need that capital. If I'm building a men's face wash company for tier 2, tier 3, which is actually a company that was made and bootstrapped and got acquired by one of the largest consumer conglomerates, not minimalist. This is a company called Moodstack, which Godrej acquired. Then you don't need to, right? Either raise capital, or you can then go to a family office or a corporate venture arm, which has expertise in that field, and that is willing to wait it out for a longer period of time. But even there, if you say, look, I want to get to 100 crores in 3 years or 4 years, or that's my ambition, then you will need capital. If you're building an online brand, I think capital might help you do more performance. I'm not saying it's sustainable, but if that is the ambition, you will need to go. Family office usually will not go in and write as big a check as some of the VCs will do, right? Because their capital pool is limited, and I think they're also more stringent about where to deploy. So that is one kind of framework on how to think about.
But isn't that better? Like, before you answer, like, isn't just like the family offices, for example, or the institutional capital, the difference is obviously the buffer available, you can write follow-ons, you can get more in the network to actually participate. But say if I'm building something in consumer, and if, say, this family office knows really good consumer tech, for example, I'll go to them. They might be stingy with how much capital they give me. Isn't that better? Because I'm diluting lesser today. And because this is such a well-known, for example, I had an inkling that this might be the only reason why somebody would go to a VC, that capital available is more. But say a larger company with enough in the coffers, can't they promise some of these best founders? Because these are not, every day you don't meet a great founders, come up with a great idea. So can't they really promise them saying, if you do well, we'll back you. Why don't you take small amount of money today, go experiment, come back to us a year later? Are those conversations happening?
Yeah, two thoughts there. I think when you think about VCs, especially ones that either have tremendous sectoral depth or actually are present across multiple geographies, I think the one thing you can't really underplay is the access to knowledge that you get, that some of the family offices probably don't have the same purview to. Like, you will get the best of the playbooks for the country, but you also have those playbooks augmented by the best of everything that happens elsewhere. These VCs also will have much deeper connections in the ecosystem, and at least from what you have seen, it's a pretty friendly ecosystem. They're happy to introduce founders to others, to the point that Aditya had mentioned. The second thing over here is not directly answering your question, but I think the way to think about this is, at the end of the day, these are multiple investors involved in every deal. So more often than not, we actually see VCs, family offices, and a couple of others of either archetypes all coming together to sort of get the best of all worlds. And you haven't looked at the data really, but if I were to look, I would be willing to bet 90% plus are not single investor deals. Like, you have these syndicates coming in, etc. And finally, to the question of, can a family office technically say, hey, here's some capital, try it out, come back? Yes, but I think some of the global VCs might be a little bit more understanding of the fact that something is experimental. It might not take 1 year, it might take 2 years, but these are the signs we'll be looking out for. It's very case to case, so I don't want to broad brush this. But that's probably why the ecosystem does at times, especially in more experimental bets, more nascent spaces, tend a little bit towards VCs. I don't know if you think differently.
Fully agree.
This to both of you. This is just the inversion of Dinesh's question. And because we were speaking to some of them earlier, without taking names, like what has gone wrong whenever companies have gone ahead and chosen a VC or a particular type of investor? What have been the horror cases in terms of generalizable, let's say, ideas that, let's say, somebody who's a founder who's listening can say, dude, this is the thing that I don't have to do.
See, one is you must speak to other founders who have taken money from that individual fund. And that is more to understand, effectively, if I really strip this down, what are you doing if you're taking VC money or any external capital? You are saying, I have a certain idea which I am going to make into physical reality, and it is going to achieve a certain size and scale, and I need help, financial as well as otherwise. And if you come on the journey, then at some point in the future, you will not only get the joy and the purpose of actually helping us out as entrepreneurs, but you'll also make returns, right? That is really, if I really strip it down to the 101, that is what you are doing. You should be very clear about the kind of VC. When I say the kind of VC, the specific people that you're going to be working with. The two of us, for example, all four of us will have different styles.
Absolutely.
That is at one level, right? We may not gel with somebody, we may really like to bond with somebody else, right? So that is one filter. Now look, it becomes harder if people are like, look, I have to raise money and I don't have choice, and so I can't really have the luxury of picking and choosing. But if I was to answer your question, what can go off, right? One is just that your individual styles don't match. The second is, say I want to run a D2C brand, you've invested in me, you want me to become a platform, and that will create friction at some point, right? So just misalignment, the extent to which you can pick it up early, which is why I'm saying, talk to other founders, fellow founders. That's the second thing that can go wrong. Third thing that can generally go wrong that we've seen is just lack of transparency both ways.
That's an evergreen one.
Right? So and that happens both ways. I wouldn't blame it's only the funds, right? It happens with founders and it happens with the funds. So those are the kind of things that happen. And the fourth thing I think that sometimes happens is that there are moments in a company's life cycle when they might need more active help, and there are moments when others should be hands off. And sometimes there's misalignment there.
That's a fine balance to
That's
work.
a very fine balance. And when sometimes it goes south with companies, that's when you see a lot of these fault lines actually come to the fore. So I know it's very generalized because hard to give
No, I think general is better in this case.
without names. But will you add anything?
No, actually it covers it. I mean, the only other thing that people usually watch out for is how much capital are they accepting, what valuation. I think we've seen that discipline come in over time, but I think you captured it pretty well.
I mean, just one more, partly cynical question.
You're the cynical guy. He's not the cynical guy, right?
He is the sunshine and roses.
I'm a very optimistic guy. Yeah, generally.
I've never gone and raised money, but I would presume that if I'm a founder and I might be put in positions where I might not want to do something. We were discussing a few cases where, let's say, you are expected to do certain things with your numbers. You're expected to it could be doing an entirely new line of business that you have absolutely no business doing. Apart from these obvious, let's say, pressure points where you might be forced to take a detour, which typically doesn't end well both for the investor and for the founder. How do you advise a founder to navigate these pressure points where he kind of is in a tricky position but doesn't know how to navigate it?
You take this?
Yeah, I'm thinking.
I would presume it happens more often than not.
I think the pressures are very real, for sure. I think it all goes back to some of the horror story situations that I've seen. I think what he said holds a lot of water, which is, I think you'll have to be in some alignment or a good amount of alignment with the person that you're getting into the deal with.
Know who you're marrying.
Basically. I think in some sense, and we have seen this in more, I would say, forward-looking founders, a lot of the initial questions are also about the paths that they can take, to be very, very clear. There's a company today, there are a few threshold triggers we'll see on where the market is going. Look, if it's going that way, this is probably where we're headed. But these are pretty early conversations. So it could either be even before the deal, but it's usually preliminary then because, you don't get to a lot of details. But right after the deal, just really sitting down, talking through when we are at a crossroad, this is kind of the direction that we are going towards. And at the end of the day, it's all going to come down to your equation with that specific investor. I don't think there's really anything else over there.
I think there are signs. Look, there will be less obvious issues that can come up. So not issues, but decision points. So you can get a good sense. Simple stuff like, should I don't know, I'm a Series A, Series B company. Should I hire somebody as a chief investor relations officer?
Chief yoga officer.
And the investors are very keen for whatever reason, right? They may feel that those guys will come and help you raise or whatever, right? But you may have a different point of view on it, right? I want to expand internationally, right? Somebody says, no, don't do that, right? So there'll be lots of these questions. Velocity of growth is usually a big sense of misalignment, right? Where I want to grow at a certain pace and then I'm told to grow at a certain pace. Sometimes it works, many times it does not work because the original business model may not have been attuned, or at least my capability may not have been attuned to growing at that pace. That most of it you should try to the extent possible, try to solve before you actually get into a partnership, right? I think that is, but I understand that many times you will not be able to, right?
Might not have a choice.
You might not have a choice, or you may not realize, right? It's only sometimes when shit hits the roof do you actually
More of
getting
that,
more
please.
of that piece. Yeah. I said it and I looked at you. Right? So those times is when you realize what the friction
No,
points can be. I don't think there is one kind of magic bullet to really help solve it.
I know I'm supposed to be listening, but I think the one other thing that most founders tell, at least us at
New LinkedIn post, huh?
what has helped is, I think, generally transparency. I think, one of you said it. I think it's best to tell investors what you're thinking very often, because most of these misalignment is also because you've been having some ideas in your mind and you keep thinking about it for 6 months and you assume that, everybody around you knows it. And generally it's not the case. I think because, say, if you want to grow only 50% next year because of whatever constraints, you should just say it out loud. And, because that conversation shouldn't happen 6-7 months down the line. It should happen right then and there. At least those are small things, basic things that people can do essentially. But one follow-up question to what Bhuvan was asking, most of the people watching this might also be wondering, you've spoken to so many of these founders, LPs, family offices,
Lawyers.
There's sectors that people are keen on. There are sectors which seem too hot at this moment. There are sectors that people are not keen on. If there's somebody who's building like a company ground up today and he's got access to capital, which sector should he ideally be looking at from a 10-year perspective? Not from a 1, 2-year, 3-year perspective, because those trends are very clear from the report. Well-tech is doing great. Quick commerce is doing great. Commerce, in fashion.
You don't want anyone else to do well-tech now.
Yeah, no, I think, we probably want more people in well-tech. But if you are a 22-year-old person coming out of engineering or any college and you're trying to build in something, what could it be? Because some of these guys must be telling you, hey, I'm keen on this sector. Because most people are indexing on PLI schemes, government incentives, and these are businesses that might be built for over the next 4-5 years, but who knows what's going to happen in 10 years. So are people talking about these?
Yeah, you want to start?
Actually, I think you should start. I'll add on.
Great. So, because we may have different sectors, right?
Exactly.
But so look, I think ideally we are at a stage where as funds have become bigger, India-focused funds have become bigger, deployment dry powder for India has become larger, and they've seen cash, they've seen exits, they've seen IPOs. In principle, you should be okay with longer gestation periods and longer term bets. So when we speak of clean energy, right, renewables focused startups, or you're going really deep tech, right, which is still very nascent in India, right, as compared to what it is in the US. Or even when we're talking about generative AI native solutions, we're doing a lot of AI, but a lot of the initial work was still more around, the layers and the wrappers, right, versus something being very fundamental, right, which now you have a few, but so you can build for that, right. So I think that's one kind of theme, right? Long gestation period, you can go for these.
But is it fair to say these things tend to be very capex intensive, very capital heavy?
Some of them will be, right? Some of them absolutely will be. I mean, the other one I was going to talk about is just manufacturing, right? And I think EMS as a space and the entire value chain in manufacturing is a huge opportunity for us to partake, and not just because of China plus one. I think in general, I think there is capability, and you can actually do a lot of good work there. It may not be a very glamorous industry, which also I think is changing because now a few VCs are going and backing some of these players. But that's the other one. And then the third one I'll pick is, which might be a little contrarian because people think there's a glut of companies in consumer. But I think that you will still have a certain trend towards premiumization in the country. Now, whether it happens now, whether it happens 5 years out, or consumption slowed down, everyone knows consumption slowed down, right? I'll tell you, Nestle had great results, right? And all of that, right? But over a long 4-5 year period or a 10-year period, I see little reason to believe that consumption in India will not go up in a country that has largely been savings focused, right? Both consumption as well as obviously investing, and that's why well-tech and all have taken off. And within that, I think there will be 2 tiers of opportunity, right? One is if you build something that is, say, value retail, right? That is really focused on mass distribution, and there's some excellent examples of this. May not be VC funded, but there's some public companies, for example, that have done value retail very well. Or you go up the ladder and play the premiumization tailwind. The niche sectors. I think they will not be niche. Yeah, they will expand. If you think of, like, for example, think of beauty and skincare. Right. I think there's a lot of companies that got founded were in the mass teach segment.
Yeah, everybody wants to be beautiful.
Yeah.
Right? But including the people who are actually going up,
Yeah, absolutely.
the per capita ladder, right?
yeah.
So there's no reason to believe that you will not be closer to where some of the more developed,
Yeah.
say, Asian countries are when it comes to that particular subsegment. So that's one where I think you can build.
I'll maybe just
I
add
have a
two
follow-up
thoughts
on
to
the
that.
consumer thing, but I'll let him finish.
Yeah, just adding two thoughts to that, not specifically sectors, but I think looking at fast-growing spaces and thinking what are enablement opportunities is pretty interesting. For example, we saw a group of quick commerce enablement companies. I think it's also looking for opportunities in something that's stretching so fast that's going to have institutional voids. Could be an interesting play for sure. Something that most people don't really look for that actively.
What can be an example for something like that?
I would actually say quick commerce enablement. And people talk about software, SaaS, etc. I think a lot of the horizontal SaaS, now the play really is AI enablement, etc. But I think as new industries come out or subsectors come up, thinking about verticalized solutions for that place is not only solving a need gap, but I think you're positioning yourself very well for potential acquisition down the line. So that's one thought. The second thought is I think we shouldn't play down research-backed ideas. I think the less research and knowledge that actually goes into your idea, the less moat you would end up having. I think a good example actually is, I would say, beauty and personal care, where because of how well equipped the ecosystem is for manufacturing, I think someone can come in day after tomorrow with a new trend and possibly disrupt you. So I think there is an angle of, is there a knowledge moat I can have as I go into this? And the third is, how do you think about your addressable market? I think software, again, is a good example of this. I think building for India is a great stepping stone, but you need to have your eyes on either the India-US corridor, or at least at the very least, a regional corridor. We have seen a lot of our, I would say, older Indian software companies testing these playbooks and seeing what really works. I would just park those three ideas as thoughts that people should have as they're thinking about starting up today.
Just one follow-up on that research thing. We know that we don't really have a great ecosystem. To the extent that things are happening, to the extent that you guys have seen it, is that changing? Because, for example, in the US, pretty much, at least the initial wave of startups came out of universities. They came out of government-funded programs. Today, take any major, the legendary companies. They all have some government threads or university threads. But that's not really a thing in India to the extent that it is in the US.
Huge opportunity. Yeah. If you ask me, huge opportunity. In fact, see, if you want to, I was talking to someone last week about what are the four or five elements that are needed to really create a startup ecosystem anywhere in the world, right?
It's a nice fancy word though, ecosystem. But
so, because you are cynical, so let me break it down. What does that word mean?
No, I meant it in the sense that we keep saying ecosystem.
No, we don't have an ecosystem.
Yeah, that's what I mean.
We don't, because see, I think we've had some exceptional founders and some exceptional entrepreneurial hustle, which has always existed in this country. And some very sharp and foresighted investors who got together and have created, these results. An ecosystem means that you're creating something that's very repeatable and, very sustainable. Playbook, right? So you need capital, you need top talent, you will need some relatable heroes, right? Of people you can look up to and be like, oh, this person went and did this, and started something, sold something, IPO'd, etc., right? And then you want to look for, fourth thing I think you should look for is some wave or some tailwind. A lot of the US stuff that you're talking about,
right place, right time.
Right, and there were specific waves. For example, what is happening in AI today, right? Which many of these US founders actually rode on. And the last thing which is very important is an environment. And that environment has to be, I would say, almost physical. And everything that, why could you not have Y Combinator like setups in India? See, in a way, a lot of the funds are trying to also do that by having accelerator programs, by trying to go pre-seed, pre-idea. I think some of the top institutes of the country, at least the alumni, are getting together and trying to do this. But it needs to spread beyond the IITs, right? It can't just be, you might say, oh, Bangalore is an ecosystem, right? But I've met some exceptional entrepreneurs in Jaipur and in Coimbatore, right? So they may not have all those elements, especially the environment there. I think in this city, you can say the coffee shops are probably an environment, right? So that is a huge opportunity. And can we do that? Can we do that through the government? Can we do that through private institutions? I mean, you'll obviously have places like every state, like for example, there's a tea hub in Telangana, right? There'll be others, right, in different states. But I think if you play that right, you can actually create or help entrepreneurs who can build for this longer term. So huge, absolutely agree with you. I think we're not doing it, but it's a big opportunity.
I'm not as cynical as him, but
I have a follow-up on my, like, are people like me overtly cynical,
Yes.
considering
Yes.
the fact that
Yes.
this is, we are innings one, not even innings, warm up of this
Yeah.
entire stage.
for sure, I can answer.
Yeah, I've also answered.
Yeah, but we're very early, right?
Yeah, we're very early.
VC landed up in India in 2006.
Yeah.
We're talking about 20 years. I think
It will take a few cycles for people to understand,
Yeah.
investors, founders, everyone, how it works, right?
Yeah, I'll qualify the word cynicism. I think no doubt the opportunity is massive. I feel like sometimes the question that I have as a cautiously optimistic person is, are we aligning ourselves toward the direction that will take us there the fastest? I think that's where my cynicism comes from. I was speaking with a friend that works at a policy think tank, and it was exactly the same question, which was, what does India need for an ecosystem? And as you were talking about it, felt like a bit of a chicken and egg, where funding needs to come from somewhere, funding that's patient, funding that understands the nature of this game. It needs to go into the right catchments. Is it post-grad schools? Is it undergrad schools? Is it specialized institutions, say an AI school? It needs to have the right talent. We need to have the right infrastructure to attract that talent. So it's a few things going on over here. So I think I probably fall in between this group over here. Yeah.
On the consumer bit, again, I'll tell you all the cynical numbers. So if I'm a public market investor, I'll rattle off all the macro numbers. You look at consumption growth, it's gone nowhere. Remove the premiumization trend, pretty much everything across the board. You take any listed proxies, the sales have been flat. Real wage growth is, since COVID, has been not flat, negative. Then there's this overhang of what AI will do. Then there is the fact that for 3 straight years, we had the worst rural economic phase possible. Seems to be turning around. If you take away that premiumization trend, if you take away the fact that whatever that X number of millions Indians, X number of, not millions, lakh Indians who have the disposable income to spend, which probably explains the premiumization trend. Do you think that that opportunity set you said in terms of the consumer space, can it spread beyond those things?
I think it can. Look, I think if I was building only for here and now, so let me answer your question. Is there a structural consumption issue in India? Right? I don't think so. Right? I think that, again, that's a different, separate podcast we can get into on what happened. But it's true. A lot of the large listed consumer companies saw kind of flat growth. I think now this quarter, a few of them have...
HUL has been doing 2% for 20 years, I think.
Yeah, but I can give you examples of many... if you want to name companies, right? I can name a Trent, I can name a
Zudio.
Zudio, and there are many others like V2 Retail and a few others, right?
Vijay Sales.
Vijay Sales is growing because of Biswa's stand-up act on it. I like Vijay Sales.
But I didn't know they were at such a scale until like 5 days ago.
No, but see, this is a great example, right? So all of these companies have actually seen pretty high growth, right? Zudio has seen high growth, right? V2 has seen high growth. I think a couple of these companies in Calcutta, which have...
None of this is stock tips, please.
Yeah.
none of this is stock tips. So it's not true, right? And now why are they seeing growth? Because clearly now there is an unbranded to branded play that is happening for a certain section of the society. And there's a large chunk where penetration is already very high. Right. Wage increase has not happened. There was price increase also. A lot of these companies, consumer companies, there's a lot of reasons. So one, I think that's not true. So there are pockets, even non-premium, that have seen growth. This large middle chunk you're talking about, my sense is it will come back here. We are not structurally where we are.
No, I get it. I get that the blind spot in my argument is I'm making a point in time judgment rather than a trend.
So for example, this face wash company I'm telling you about, right? I mean, they built to a very decent scale, very profitable company and have had a fantastic exit, right? There are various others that you can kind of think of. I think that if you're playing a 7 to 10 year window, which you should as a founder, there is enough opportunity. You need to be very clear on what your moat, again, it's a very abused word, but is it in this case, is it the product? You know, if I'm running a skincare brand, for example, and I don't own my formulation, which is what I think is true for a lot of companies, then my only moat really is my marketing.
Distribution.
Not even distribution, right? I think it is marketing, right? And it's performance marketing, which basically means if I've raised money and I'm going to spend, that to me at least is not a very sustain. You might still have some successes, but I don't think it's a very sustainable moat. And the premium segment, I think, will become much larger because our premium is not global premium still, right? I think if I look at global standard, we'll still be.
We are the benchmark for ourselves.
So I think that there you can absolutely build. I don't think AI, by the way, will once. See, look at QSR as a segment. Some of the QSR platforms have seen very high growth, right? And of course, you'll find exceptions to all segments. I don't think so that is also a little more protected by AI. I think AI is going to impact. You still need to go out.
People will
and
binge it because of the
you
anxiety.
still have your waffles. You still have this, right? You still eat.
Yeah.
So I'm a lot more optimistic on consumer long term.
I think Suitcases paints that trend very well. If you look at Safari and
Mokobara and National Miles and
yeah, absolutely, it's a gradient.
Even VIP.
The India Premium. Yeah.
We haven't spoken much about the report, by the way.
Yeah, no, but I think all of these are insights from the report because the numbers are out there. I think I had two more questions. Like one final question on the ecosystem. I think you guys spoke about the ecosystem. I think Bhuvan's very cynical. I'm not.
I'm optimistic.
I think some optimism, I hope, flows. But I believe that I think institutions are trying. At least education institutions, even in rural, say, at least there's some support from the government, etc. What are one or two things that you picked up on while drafting this report that we can all do better? Like not for the VCs, not for the government, just all of us collectively. Are there one or two things that we're not doing that we can do better? Capital providers, companies, founders, entrepreneurs, can they speak more about what they're doing? Can they ask more? Anything else?
I think we need more capital.
Yeah.
It may not necessarily be the kind of VC capital that we are seeing, but for example, Startup India doing a second seed fund, etc. Right? You need that kind of capital which flows into companies.
And capacity building.
Right? I'll maybe add one point, and Aditya, you should add. I think you need more inspirational stories. You need more,
absolutely,
right, relatable stories. We are at a place today where I think more people are willing to start something and go on a founder journey.
It's a thing.
Right? It's a thing, right? Yeah. Which also has its downside, right? Because ideally you should not do it because it is a thing, right? You should do it because you may have a great exit in 3 years or 2 years. But base case, you should assume that for the next decade, right, you are working very hard and many times by yourself on problems which will not have obvious solutions. So you need to be ready for that long haul. So to the extent to which I think we can also create those heroes and support people. When I was in college, in undergrad, it was still not, people were still like, why do you want to be a founder, right? And I think that has changed, but it's not near full potential. I think there's a lot more we can do as people to support them. That's why all the incubators and accelerators environment goes, I think, to help you do that.
Ecosystem again.
Ecosystem. And if you have those stories, because see, tomorrow, if one company fails, you will have 10 write-ups written on it, right? And sometimes
successes are celebrated, failures are cautionary tales.
And then people talk about it, right? Your family, your parents will talk about it. Oh, that's this
black
one.
sheep of the family.
Right? Well, no, everyone knows. If you want to start something and some other company has failed and some publication writes about it every week, right? Then they'll say, look what happened, right? So I think that is one that as a general society, I think we need to get away from.
Because we recently met this team. Yeah, they were trying to bring out inspirational stories from, basically they were trying to bring out Kannadiga entrepreneurs who've done well, but aren't really well known. And their point was, let's say in Mangalore, nobody's going to relate to Elon Musk and Larry Page because they don't really care. They're alien. But if there's a local entrepreneur who's built a small business, they might relate more to that. But to the extent that you guys have paid attention to these trends while doing research for this report, is this phenomenon of entrepreneurship is it spreading beyond the obvious cities, like the top 25 cities that we have spoken about? Like, would you guys have an opinion on that?
Beyond the top 25, frankly, I don't think I've seen a meaningful trend. I could be wrong. I haven't seen the data or dug into it. But I would say it's definitely beyond the top 4-5.
Still,
I think
still
that's good. Yeah, absolutely.
Yeah, it was like few years back.
Jaipur, yeah, 100%.
A few years back, it was Kormangla.
It was Kormangla,
yeah.
right? I mean, look at, so obviously you have the big cities, the metros, right? NCR and all that, right? Yeah. But Jaipur, Coimbatore, that I give an example of, right? Lucknow, right? So I think a lot is coming out of these places.
Pune has done well.
Pune has done very well, right? But again, I don't want to repeat the environment point, right? But I think the reason it's important is you have to give that environment to students and to...
No, 100%. Like the capital markets business is a prime example of what an ecosystem can do. Like
Absolutely.
from listing, from raising capital, from having participation of people who want to buy your overpriced IPO shares. So you need that ecosystem.
Just like adding to your point, what more we can do. So where this comes from is I do a lot of recruiting with top tier colleges, and I constantly speak to students and professors there. And the biggest ask is, well, the industry doesn't talk to us much. It's a very transactional, usually one-way traffic, which is they come on, take the recruits for hiring and walk away. I think the biggest issue is we have so many educational institutions. We can debate on the efficacies of those, but really what's missing is a touch of reality on what's needed on the ground. I know we have spoken about this for probably 2 decades now, but I don't think the rubber has not hit the road over there. We need more. I just don't mean only startups, etc. I think it's very important because they are at the cutting edge of innovation, but just steady state industries. Just be more involved in the local institutions. It needs to translate those classroom lessons to, hey, this is what's actually going on out there.
Pune reminds me, I think they have such a beautiful startup community. I think it's a very small city with like 1 or 2 incubators, which are where most of the startups spend time. I think what's helped them is essentially every startup tries to help everybody else. I think they keep referring to every other fund out there saying that this guy is building something really cool. And most VCs in India today, I think, are functioning on referrals, right? Because I think there's so much deal flow. Unless somebody really tells you this company is really good, you got to take a look at it. Nobody's really going to bother as well, which is a problem, I think, another problem. But my last question, I'll let Bhuvan also ask.
I have a few more if you guys will indulge me.
So I have one last question is, in 2025, while you were drafting this report, did you notice anything that was out of the ordinary? Because I think we all speak of general trends. I think, was there anything that was exact antithesis to what the mainstream media is writing about the startup ecosystem? And in 2026, do you see that continuing?
Actually, not with regards to what people are writing. Okay. But I think that the one part that we found a bit of a contrast, which is why the title of the report is also Warm Currents and Cold Seas, is like Aditya had mentioned, we see the ecosystem, the investor ecosystem day in, day out. And we knew that there were headwinds to just broader deal activity in India. I think what caught us by a little bit of surprise is this little sliver that we call VC and growth was actually still doing quite well.
But can you just define growth and VC?
Oh, absolutely.
It's great. We just started.
Let me recap that, yeah. So the way we call VC and growth investments is anything that's deployed by the typical VCs, family offices, corporate venture capital funds, micro VCs, they all fall in the bucket. It also includes the growth arms of the typical PE funds. It also includes all the activities that occur in consumer tech, health tech, wealth tech, fintech, SaaS, everything, because typically the nature of those investments still ends up being more growth oriented. Any buyouts are of course removed. That's what I mean by the section of the deal activity that's called VC. And
you guys have, like I was mentioning earlier, you guys have a unique definition of compared to the textbook definition. You're done?
Yeah.
I have a few more questions.
Yeah.
I mean, I should have asked this earlier in this thing. So because everything happens in a macro context, and we know the absolutely sane, totally not crazy, totally calm macro environment that has been going for the last years. How much of that does have an impact on the VC/growth ecosystem? And the second thing is, like in terms of, because now VC is becoming a thing in India compared to the public markets, like is that relative trade-off calculation changing in terms of people saying that, okay, dude, public markets is not really the only game in town. People really feeling a little hot for VC in India. Like, start with the macro question. Like, how much of whatever is happening outside, is that having a bearing on our deal activity?
As big a bearing on VC as it does on private equity, right? Or more buyout funds. Yeah. I think one reason is that the nature of industry is that if I look at the PE industry anywhere, right? Yeah. They would invest in larger companies, very stable cash flows, would end up being manufacturing, consumer, pharma,
mature business,
CDMO, CMO within healthcare, mature businesses that have very acute linkages with global markets, right? In the VC ecosystem, if you see, for example, in India, if you see who's getting the funding and who's actually growing scale in no particular order, a lot of the well tech platforms, right, or the broking platforms, right, that will have no, I mean, it will have some implied relevance if you think equity markets will go down and retail participation will come down and, the net addition of demat accounts will be lower than what it was. All that is fine. But a direct correlation with what is happening outside will probably be more limited, right? Same for quick commerce, right? Or e-commerce earlier, right? It's again very insulated. It's not like we have a huge ecosystem of VC funded companies that are having direct linkages, outside. The one area I can think of is more software, SaaS, AI, but that impact is less to do with the macro, right? I think that impact has to do with the fact that there is a huge Gen AI disruption that has happened, and SaaS companies that could not or have not reinvented themselves, either organically or through acquisitions of AI offerings, will face headwinds, right? They may have a certain cash position on their books, but growth will slow down, right? So I think in that context, it's kind of not that correlated, which is also to Aditya's point, which, if you see the data, PE market in India is still very robust. But last year you saw a dip in total value, right? Versus the VC market, which has grown. And even if I strip out the top deals from last year, it's still grown versus 2024. Right. So that I think is more insulated. Public market, so second question, yes. I think
trade-off,
Yeah, I think people if everyone had assumed that, you said 12%, I think everyone was assuming that 18 to 20% compounded is...
That's very conservative, by the way.
I should come talk to you, right?
I have Taj Mahal to sell you, buddy.
And now I think they're realizing that that's not the case. Also, see what happened when the public markets really boomed in India last 3-4 years is private valuation also really increased. And now I think there's a situation where you can see some tempering of valuation, and you have seen what has happened in public markets.
That has happened on the public, but has it on the private side?
It's happening. I think it's happening. In some places, it's a little less obvious.
Which segment specifically? Like, if you have any visibility on that, like, where are the valuations deflated? Like, where has that craziness in the post-pandemic period?
I think older tech, definitely. I think new age or Gen AI, new solutions, probably not. Right? I think it's still, it's still pretty punchy.
By old tech, you mean SaaS, commerce?
By SaaS, more SaaS, more software. There, it's not like everyone's doing down rounds, right? I think there are a few that have actually raised. But again, they've gone and integrated AI offerings, etc. Sometimes there will be a structure around, and it will be hard from the outside to figure, what's happened. But that is one obvious place where I can think of, right? I mean, SaaS companies are raising at...
Not crazy valuations.
Yeah. So that's, I think, one segment where it's tempting.
Back to the replicate. The one interesting thing which you mentioned when we were speaking before the recording started was, like, you're explaining how the behavior of a lot of these companies, or rather the fates and fortunes of these companies, has changed because quick commerce is now really a thing. And you mentioned several old school businesses that have suddenly found new life because this thing has become a thing. So that's like, if you could recap, that's one trend. Yeah. And in other segments, like, what are this shift? Like, I can think of premiumization, another obvious shift which has kind of changed consumer behavior, revenue patterns, whatever it is. Like, to the extent that you guys cover all these broader industries and sub-slices, what are these unique patterns that are interesting and founders should also keep an eye out for? Because if I can build a business on back of quick commerce, which was not really a thing until 3 years ago, I think that's a massive shift. Yeah. Like, what are such very unique patterns that you guys are noticing? This is for both of you.
You want to start with the quick commerce one? I think that's a great illustration.
I think quick commerce has given... Okay, so two parts to this, right? One is, I think, last 3-4 years, quick commerce has given many consumer brands an opportunity to actually go into market very quickly. And if you have a good product, a certain niche, and the segment itself has seen tailwinds, like take snacking as an example, right? Take savory snacks as an example, or take Indian sweets as an example, or take ice creams as an example, pet food as another example, right? These are categories where quick commerce has helped you distribute to, hundreds of thousands of people.
It's expanded the pipe.
Which you would have had to do offline GT distribution, right? Or you would have started with MT, you would have done, some of them would have done GT also. So that velocity of distribution has come because of quick commerce. But I think that will also get a little bit more challenging going forward, because a lot of the quick commerce platforms also constrained by space in the dark stores. Quick commerce is still not a full discovery platform, right? A lot of people know what they want. Either they know the brand, or they have a very good sense of 2-3 brands I need to choose from. So in that context, if I start the 10th ice cream brand only because I think quick commerce will give me an acceleration. That might be a little tougher than what it was earlier. But that said, there are many brands when it comes to, especially when it comes to snacking or ice creams or pet foods, which have seen explosive growth. Explosive to the sense that some of them have crossed, 300, 400 crores of top line, which is almost entirely built on quick commerce. Those brands also at some point will need to go to GT, I think, right? They will need to build offline if they want to scale to 1,000 plus. Quick commerce by itself is still a 20, 25 city, top 20, 25 city phenomena. So what was your question?
Other interesting trends like this, which has...
I'll probably add one more and you can figure if it is aligned to your question. I think oftentimes when people think about VC investments, it's all about, well, I mentioned it too, consumer tech, wealth tech, fintech, ed tech. I think the one trend that we've seen the last 3-4 years is VCs are also looking for, the lack of a better phrase, earlier businesses with physical presence. There's just a lot more on the ground. Two really prominent examples in my mind. We saw a lot of VCs investing in affordable housing finance, MSME loan companies. Very uncharacteristic for VCs, but if you look at the thesis, right, actually makes a ton of sense. These aren't, winner takes all markets, big TAM. It's really about being on ground, very sharp execution. And with exactly the same heuristics, the other area would be, and Aditya mentioned this, tier 2, tier 3 retail chains that are doing really well, expanding in a thoughtful manner. And the reason I want to bring that out is that is definitely a sector and a theme that's grabbing the eyes of otherwise what you would qualify as tech-first investors.
But why though? Because the entire bet, is the fact that there'll be more and more people in these smaller towns and cities who will buy from some of these outlets. But you're also then betting on the fact that all of these guys are aspirational, will move to the cities. So why would they be looking at these local retail stores? Because they're competing with local trust, local shops, which have built trust with people. One of the things I think, obviously, there are a bunch of these smaller retail folks, right, who are doing these kirana stores for, say, the next tier of towns, etc. I kept asking them, is your bet that all of these existing kirana stores are all getting older? People and the next generation don't want to go set up a kirana store. Is that the bet? Or is the bet that consumption will grow in some of these cities and smaller towns, etc.?
I think consumption will grow. Look, I think there will be, in the full universe, if you see, you are going to take share away, right? I think that, we can't deny. That might also happen with quick commerce, right? So that will happen. But in general, you will be surprised to see the amount of unbranded consumption that happens in India, right, outside of the big cities. And if you go to that population who are educated, aware, aspirational, and give them a branded experience, a retail good branded experience, which also becomes like a community family outing almost, right? I think it's a huge premium to their lives. So I think consumption will kind of grow. Will it disrupt or will it kind of facilitate the shutting down of some local stores? I think that's inevitable. I think it will happen. Many of them will continue to exist. Many of them will continue to. It's happened, by the way, even pharmacies and all that you see, right? You still have so many, Cat B, Cat C pharmacies, right? Some of them have rebranded, done better. I saw it happening with multiplexes and single screens, right? You can think of so many examples where it's happened.
So if any such anecdotes, stories come to mind, that's like the final question. That's it. Like any interesting observations that from all your interactions with funds, VCs, not lawyers.
About what's changing?
Yeah, like for example, the consumer behavior which you mentioned, which is...
Quick commerce is one, that's I think is...
so that way of,
You're saying beyond quick commerce, what else is changing?
Because I think you just... Like, is there anything more to quick commerce that you want to speak about?
No, look, the only thing that really surprised me about quick commerce was that a lot of people thought it would be a impulse purchase.
Me included,
But I think it moved to not just being an impulse purchase, but people are stocking up on quick commerce.
No, like half of my grocery shopping is now.
So that is just expanding the use case and the TAM for quick commerce, right? So...
Other industries, like any such thing? I'll ask the Gen AI question, obviously. But is it all when is apocalypse due? But apart from that...
Hardware manufacturing, anything at all?
Banking, fintech.
I think so. I think well tech, right? As a broader, no, of course. Look, there are lots of companies which will start, and not all of them will succeed, and many of them will sell to the larger ones.
That can be said of all industries,
Right?
but
All industries, right? But I think well tech is definitely one, because if you still think of the behavior for most Indians, it wasn't oriented towards going and investing.
100%. Right.
Forget the numbers and the records of demat accounts open.
Those are all gas.
Right?
Yep.
You have to look at, is there a general directional change in the behavior, or at least in the psyche of people? I think that answer is yes, right? Of course, like broking platforms, have captured that. There are some non-broking well tech platforms that will, kind of come and play. That's a change I think that we are seeing. And last year you would have seen a lot of them getting seed stage funding. We'll have to see where they land up in the next 3-4 years. But I think as a behavior, that is something that is changing. The third one that I'll pick up is hardware manufacturing, electronics manufacturing. There are some fantastic founders who are doing everything from design to procurement to manufacturing, working with some of the biggest electronics names globally now. And they built in India, right? And very capital efficient, many of them are very frugal with how they built it. So that's again going to be a huge, and they also seen companies that have listed in this kind of ancillary space and have done well. So that's again the relatable heroes point that we made earlier. There's more you can do there.
In terms of, one last thing. I think Bhuvan was speaking about sectors, but I think the entire ecosystem has, over the past 10 years, I'm speaking about UPI, mobile penetration, data. What's going to be the story for the next 10 years?
I think it's what you do on top of the public infra. Like I think it's the first one is the network effects you would get from, I would say, behavioral data. It's really who gets to that scale first, and importantly, who uses it. I don't want to use the word weaponize it, but in the sense, personalization, using the data for underwriting, because that just helps you make a lot more of what people call addressable market actually serviceable for you. I think the second point over here is, I think experience in this space specifically matters, especially for people that have seen the regulatory cycles, understand how to navigate them. So I think we'll see the more savvy, the more analytically driven founders and teams really make the most of the infrastructure. It's not moat. I want to, again, a broadly abused word. I think the moat really comes from what you make of the data and really what's that tacit knowledge that you bring in.
I mean, I'll ask about the sentence that stuck in my head. RBI compliant models.
Oh yeah, of course. Yeah.
I started laughing when I read it.
Please go read the report to see or to hear or to know what Bhuvan's talking about. But yeah.
Final couple of questions. Like the thing that stood out for me is, like you mentioned that quick commerce was not really a thing. It was more like, I'd order cigarettes or whatever it is. Then
no longer. It's no longer.
No, that's what I'm saying. Like there's that loop, like there's a platform, there's behavior changes platform. It's created like a virtuous cycle of sort. Are there any other such behaviors that are changing non-obvious way that come to mind? If they don't come to mind, that's perfectly fine. That founders can and should watch out for, because that's where most of the business models will be built. Because if I go back to, let's say, 2021 and I'm thinking of starting another quick commerce company, I say, nobody cares. Like, who will order, cabbages on, mobile app? That wasn't really obvious. But no, they're ordering more than cabbages. Any last things that you guys might have seen in your interactions, might not have come across?
See, on the consumer side, we've spoken about this, right? So, but I think the same point around people who are now seeing more affluence, right? Kind of relatively better off than what they were before. The idea of spending on themselves, and right, and this will be many categories, right? This can be, I know.
Beauty is obvious.
But all of it, right? Like, for example, you have founders who are setting up, hair transplant chains, and right, and who are going to do PRP and everything else, right? There, big opportunity, right? If you ask me, right? Again, brick and mortar kind of opportunity unless you go do products. But so, that would be one, right? Skin is definitely one, right? There are lots of these cosmetology chains and clinics again, right? It's a different segment. Whatever you can spend on yourself, right? Which is truly discretionary. I think that is one where you are seeing behavioral change. Not with everyone, because not everyone is at the same starting point, obviously. But wherever you have the right target market, right? For those who are kind of, you're kind of seeing that. And the third thing I think is just like, there's still, I think media in itself is still a huge opportunity. Now they're
That's
different.
been a graveyard for business models.
But so what you do there, right, I think becomes very, very important or relevant, right? But as a consumer habit, are people going and just consuming more content, whether it's video or audio? I think that answer is yes, right? I think that's only increasing for many of us. How you play that, again, you're right, like a lot of models have come and because they also box themselves into 2 or 3 archetypes on how you play this, kind of media flywheel. But that's the other thing that I'm seeing, right?
I think the other, just taking the same thread forward, is if you take experience as something people are spending more on. I mean, been speaking about that for a bit now, but you see grassroots of these curated experience companies. You're not seeing anything at scale yet, but growing pretty well. Like, especially exploring tourism in India, for example, is a big theme that is coming out.
I mean, I think the IPL is an experience.
Oh yeah, completely.
If you, maybe not relevant to VCs, or who knows, maybe it could be, right?
They'll build a platform for scale.
They build a platform, right? So, but definitely, right? Like it's also the reason why movies continue to few years back, a lot of people said, that theaters will shut down, occupancy is very low post-COVID. And that's not happened, right? Like it depends on the content quality, it depends on many factors.
That's a big one.
Right? It's a big one, right? And also the perception and the taste profile of the audience has changed massively, or at least what they demand in terms of quality. But they still go, and we've done so much work in this space, working with private equity funds that have been looking to invest in theater chains and spoken to a bunch of people, done a lot of research. For a majority of them, it is still it's a community outing, right?
It's a social experience.
It's a social experience, right? And therefore, if you have the right content that matches that social experience, you can really create, tailwinds for the industry. So that's not going away, which is also the reason why, if you see the event space, forget the monetization of it, right? Because I know it's a hard space, it's capex heavy, or you do the ticketing route of it, which is what a few of these platforms are trying to do. The footfalls that these events are having is quite massive, and they could be niche events, they could be niche music events, they could be larger events in some of the smaller cities. Why are people going for them? Because they want, to Aditya's point, they want an experience. So I think that is a very interesting kind of opportunity, and I think it will need a longer gestation period, because the business model might need to be more capex heavy than light, but definitely a trend.
Got it. Now the most cheerful question of all, like Gen AI, what's your... Okay, when is it all over? Like how many more months?
I think the route that we're seeing India take is the one that actually makes the most sense from where we are. You don't see too much of the money going into infra. You see pockets, but not the salient part. I think 3/4 is still largely with applications of sorts. A lot of it, I think the interesting part is we're seeing vertical application investments. Now,
like any good examples come to mind, not company specific, but industry specific.
BFSI, healthcare. These are workflows that typically need deep knowledge, have some regulatory flank on either side that no other Me Too can come in. And more often than not, the use cases, if you really push through, end up being mission critical in either level 2 or level 3 way. The reason why that's important is you are protecting yourself from the fly-by-night operators, but secondly, it's also where the dollars will get spent. We do a lot of work in the India-US corridor, and we see in the US, BFSI and healthcare companies actually spend quite a bit on AI-driven use cases. So there's definitely something attractive for the Indian companies to pursue. I think where my eyes are at are some of these thin API-wrapped companies that came up in a burst last year, frankly, which...
Your chuckle says it all.
Yeah. Which I think remains to be seen. I wouldn't say they're all, ripe for the bursting right now, because what we are seeing is these folks saying, okay, we got some of this understanding through very quickly, but which part of it has really stuck? Yeah. And I think what remains to be seen is which of those teams that actually go after the stickier parts of the workflow. Because right now, especially with everything that we're seeing, these horizontal generic workflows are, I think, fast becoming commoditized, especially with the co-work launch from Claude.
They're becoming native capabilities in the model itself.
Exactly. Yeah. And we have a lot of these conversations, including with enterprise buyers. So I guess there are two opposing forces. One is to create a solution has become relatively easier. Yeah. But if you think about enterprise buyers, I mean like relatively larger companies, the way they think about it, they don't want to create an in-house solution for every bit and piece. That's point number one.
Shocking. You don't mean I can wipe code my own?
Your core banking solution? Yeah, exactly. The second thing is, I think these are institutions that have been set up to be risk averse. So when I say institution, I'm talking about their risk team, compliance team, procurement team. Nobody wants to be out of a job because, they trusted the AI hype and, jumped onto the shiny new thing. So the way we also think about this is, where is the company operating? Are we talking about a place where it's very commoditized and, nobody really has those guardrails? Or is it in a regulated industry, complex enterprises? So unfortunately, the answer is it depends. But the vertical use cases, the ones I mentioned earlier, definitely seem like one that will have legs if they continue to push through. Anything else that, you've seen that?
But in terms of its disruptive potential, I get that a lot of it is doom and gloom, Rich, coming from me. But like, what's your sense, considering the fact that you see companies actually put this to work in the workflows, in their companies, etc.? How are you guys feeling personally also? How are you guys thinking about its disruptive impact?
The way we typically think about this is across two dimensions. Every software, you look at whether it can help people do things better or completely replace people. So that's one way of thinking about it. The second is, in your software category, is AI completely reimagining the way things are done? Or it's, adding some helpful bits here and there. And it really comes down to how the landscape spreads out. I think the good news is, if you truly plot it across these dimensions, a lot of companies fall in the category where AI is not entirely reimagining the workflows. When I say reimagining, I'm thinking now the way you think about creating an image is very different. You don't need to go step by step, especially if you want it done quick and dirty. That's what I mean by reimagining. Yeah. But there's a lot of scope for AI either to assist or to even replace. So what happens over there is the question becomes, who is really best poised to capture that value that's coming out of it? The thinking as it stands is, if you're a company that is a system of record, as we call it, which is you hold the data, you hold that enterprise knowledge, you do have the first right of refusal in a lot of large enterprises because they don't want to go willy-nilly somewhere else. The second really big question for people to think about is, once you have created that AI feature, can you monetize it? Are you in a segment where someone is going to look at the feature and say, you know what, I see the value in it and I'm willing to pay for it? Given it's a bit more of a gradient, at least in our view, at least my personal view is it's not doom and gloom. In fact, I'm actually looking at a lot of the stocks in the US to see which of them seem unfairly sold off as well. There is going to be a bit of a correction as we come out of this to see who's really that person. And we will see a divergence in certain stocks that continue to be where they are and good ones that will come back out. But I think of it personally more as an opportunity. It's just that it's not an answer I can give at a category level. So for example, if I say ERP is a system of record that is well positioned, true, but is that company going to be the one to capture it is really where I would think the gap is.
TLDR, we still have some time before we all become markdown files.
Absolutely.
Does Bain have Bain Capital? How big is the... Do you guys have a VC investing?
No, that Bain Capital is a different firm.
Separate company.
Is it
separate
a
company.
merchant banking or is it...
No, it's a private equity firm.
Private equity?
But it's nothing to do with, like, originally the folks who set up Bain Capital were part of Bain Consulting. But now it's a separate entity, separate legal... Does
it do early stage investments at all?
They have a venture arm.
Yeah.
Venture arm?
They do have a venture arm.
And are they investing in AI consulting companies? I'm very curious. It just hit me now that maybe they must be looking at some of these, no?
I don't know. I think AI consulting in general, you are seeing, but management consulting has 2-3 different layers to it, right?
The expertise you can't.
Not just the expertise, the execution also you can't.
I mean, I can't prompt say, hey.
No, but the agents
you can
prompt,
but you can't. You won't go to
this will be a new other
tier 2
podcast.
Uttar Pradesh and talk to the distributor to convince the distributor to sell something. Right. So I think that will not go. I think it will increase productivity. It may change the pricing models. Right, people may want more value-based pricing, etc. Right, all of that. There will be enablers within consulting where AI will come in. For example, the call transcripts that you were talking about, right? There are solutions who can actually do this pretty quickly now, right? They're still not accurate fully, right? So not real.
That's always the risk,
right? But they'll get there, right, over a period of time. So it'll make you more productive and more and faster. But hopefully, we still have a job.
Hopefully.
Hope is the word with which we end this podcast. So thank you again.
Thank you.
This is absolutely insightful. Like I had a blast learning all those new things.
We're done.
Yeah, we're done. We're good.